This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. On Friday, we had reached 91. See this pink line? Ironically, that's been there for a long time. This is crude oil. And you know my price target had been 120. So we tagged it last night. You can see it almost reached 120. I don't know the exact tick, but close enough. So I had a very specific reason for that 120. It was technical. It is resistance until it isn't. The longer the Strait of Hormuz stays closed, the more likely that this first shake and bake will just consolidate in a big, wide swath, most likely from 80 to 120, but we can tighten it up a little bit. And you can see the 91 right here, gap to fill. But it is not so easy just because Trump says short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over. It's not about the Iran nuclear threat, FYI. He says is a very small price to pay for U.S. and world safety and peace. It has nothing to do with Iran nuclear, but I will write about that a separate time. But for right now, the point is my target has been hit. It was a technical target. It serves as resistance. I'm showing you on a 2-hour pre-market. You can see where we've got an evening star reversal, and literally it's coming back down to fill that gap just because it is a massive, massive move. So a doubling pretty much in the last few weeks. So that's number one. Crude reached my price target by a few pennies of 120. Now it's going to digest violently in a range, much like the metal volatility did to gold and silver. Now, in equities, you are very lucky because we do have massive amounts of puts that were sold leading into this gap down on Monday. So for a few days, this gap down on Monday, I said would likely get bought. Those puts will cover. Repeat, this is monetization. This is not fundamentals. I study as best I can, even though I'm not a quant. I'm using this as a backdrop of trying to time when stuff is going to roll. Well, I use a lot of stuff, but the point is I have seen that this would pull down into Monday morning. You monetize your puts, your short duration puts, and we have a bounce. Now, the intensity of that bounce will matter. I'll get into that a little bit more as I see the charts forming, but you can pretty much assume that we're going to go fill this gap at the QQQ level of 600. Since we've overshot into that kind of 589, 590, we'll monetize up here to 600. And for SPY, we'll monetize up here into 672 from this 661. This is how it works. We're still in degradation mode, where we fall and fill the gap, fall, fill the gap. The whole thing is still in sideways chop, big picture, as we roll over underneath the surface. We have a ton, repeat, a ton of commodities that are moving higher on inflation of food fears. This is a client trades Kansas City wheat futures. You can see this moving higher. We've talked about the ETFs of wheat and corn. I understand a few in Slack Live Huddle also grabbed sugar. Agro is another one we've gone over. Point is, a lot of commodities within the food stuff industry are very firm. So SPX has opened down, not a surprise, and it is pretty much exactly what I told you. I mean, 66, 66, I joked around a little bit, with an overshoot to 66.30. And I said the gap down likely gets a little bought because those puts are going to monetize, yada, yada, yada. We'll look at the VIX in a little bit. I did do a write-up, and you can look at it just to show you that oil chart, since I know it's here handy. Here, pretty logical why I had this set up where I could see it coming back up on a MACD. Warned about that. This is on a monthly chart of crude, by the way. And then we obviously had follow through very strong into that 91. And now we've gone from 91 very much into 120. And it's happened very quickly because that's why it's massively important and I talk about it. So we can consolidate in this range, believe it or not, for a little while. And that's what I think we will do. We hit my price target, 6666. This is SPX in front of you. Hopefully you can see this. This roundabout is not done. So that's why I gave 6630, because I saw this and I said it could have happened last week or this week. And this explosive candle And then we've got this rounding, and then you know how I am about this cradle formation and the 10-week and pathetic excuse for a bounce, and we couldn't even get above 69.20, and then we rolled over, and I'm like, okay, that's it, it's done. And now we're gapping down. We're not quite at my 66.30, but we are absolutely on 66.50, and it's not a game of perfect, but it will hit 66.30 at some point. Right now is trying to figure out, okay, I just busted 6,700, like opened at literally, look at this, 66.99.80. I got basically 6,700 right here. All right, so it's having a hard time. That is now a gap, 30-week and 6,700. We're below it. This is your channel now. So that's the drama that is the market. And you can see also that this is rolling over, and it's going to be a little while before it catches its breath. We've got nothing here of stabilization, except obviously they're trying to short-term figure out, is this done or no? We got more. I would say 66.30 is still going to hit, basically. That hasn't changed. We did have chases in the room. Mike really hopefully stayed short on this, but when we had the rollover on U.S.-Israel war on Iran, and then, of course, the threat of oil moving higher, and now the fact that jets don't hedge anymore. Can you believe that? So years and years and years ago, they used to hedge, and they stopped hedging because it was a line item that just cost them money. You've heard the expression, hedges only cost money. Well, for the airline industry, they stopped hedging. Anyway, this is what happened with airlines, and this was a short that is now on the 100-week. That's jets. The other one that I really liked, I know I was licking my chops live, and I'm glad that some took this short, was FedEx. It simply was too much too soon. And it had this absolute look that it was going to come back in and break 370. It did break 370. It is now 347 today for FedEx. Gorgeous evening star reversal breakdown. Bollinger Bands opening up. This is the 10-week, so it is a little bit of support exactly right here at 346. But you know how I feel about anything that is transportation that requires oil products, diesel, gas, doesn't matter. So the trucking space, I said to be very careful. Oh, congratulations, Alex. All right, so that's a good place for some monetization, right? So his puts are up 139%, and Slack Live Huddle, I think a few folks did that one. I think it's going to, however, bounce and then come right back down. So 371.5 is where it hits its head, and the target is 335.61 before the next. Here you are. Beautiful. Great job. Unfortunately, it's not done, Alex. So monetize, it makes perfect sense. You're perfectly poised at this 10-week. That's the reversion to the mean I was looking for. That's number one. I see any bounce going to get sold. Stuff is still very bullish in the commodity space that is related to food stuff. I just keep watching this wheat move higher. You've got ETFs for that. They're trading them already in live Slack huddle. Corn, soybeans, I don't know what else, but it's busy over there. So go there and find out. The point is, I'm looking for some put monetization on this Monday morning gap down, and then stabilization end of the week. And then we make it through, hopefully with a VIX that is in fact compressed and comes back down all the way. Are you ready for this? All the way back down into 23. So we got 28 right now. I see this coming back down into 23-ish, maybe even 22-ish. So that's your stabilization. That's your bounce play. That's your sold puts that you saw so much at the end of last week, and monetization this week. And then after options expiration, we go back down, and it's going to be hopefully controlled.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.